Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And now to this week's podcast, where we are reviewing the performance of the global markets during the 8th week of 2024, and that is from Monday the 19th to Friday the 23rd of February. And without further ado, this is your host, Jamuhuri, and together, let's dive right in. We kick it off in the United States, where, according to minutes of the last policy meeting that were released on Wednesday, Federal Reserve officials indicated they were in no hurry to cut interest rates and expressed both optimism and caution about inflation. Whilst the rate-setting Federal Open Market Committee decided to leave its benchmark rate unchanged, it altered its post-meeting statement to indicate that no interest rates would be forthcoming until the committee had greater confidence that inflation was moving lower. The minutes stated that most policymakers noted the risk of moving too quickly to cut interest rates and emphasized the importance of carefully assessing incoming data to confirm whether inflation was moving sustainably towards its 2% target rate. In the US stock market, the S&P 500 hit another record high on Friday as investors closed the week on a high note. Earlier on Friday, the broad market index broke above 5,100 before eventually settling at 5,088. Similarly, the Dow Jones Industrial Average added about 62 points to close at an all-time high of 39,131. Meanwhile, the Nasdaq Composite recorded a 52-week high earlier in the session, but dipped slightly to close at 15,996. All the three major averages were positive for the week as the S&P advanced by 1.6%, whilst the tech-heavy Nasdaq gained by 1.4% and the Dow was up by 1.3%. In the U.S. bond market, Treasury yields were mostly lower on Friday as investors considered the future direction of interest rates following the release of the minutes of the Fed's last policy meeting. The minutes indicated that policymakers were in no hurry to cut interest rates until the data confirms that inflation is moving sustainably towards its 2% target rate. Consequently, the yield on the 10-year Treasury bond was down more than 7 basis points, hovering around 4.25%, whilst the yield on the 2-year Treasury note was lower by more than 2 basis points at 4.69%. For your information, bond yields and prices move in opposite direction, and 1 basis point is equal to 0.01%. In the commodity markets, the price of crude oil posted a weekly decline as it fell nearly 3% on Friday, following the release of the minutes of the last policy meeting, which indicated that the Federal Reserve was in no hurry to start cutting interest rates. The price of Brent crude fell by 2.5% to close at $81.62 a barrel, whilst the price of the U.S. benchmark, that is West Texas Intermediate crude, was down by 2.7% at $76.49 per barrel. For the week, Brent declined by about 2%, whilst WTI fell by more than 3%. Meanwhile, Marbon oil, which Kenya imports, increased to $82.76 per barrel, and this was up from $80.79 the previous week. In the precious metals market, despite concerns about the risk of cutting interest rates too soon and the fact that higher interest rates tend to diminish the appeal for gold, that information surprisingly did not affect the price of bullion, which was on track for a weekly gain, driven up by a softer US dollar as well as safe haven demand due to the escalating tensions in the Middle East. For the week, the price of spot gold was up about 1.4% to close the session at $2,036 per ounce. And on that great note, we come to the end of this week's podcast. Thank you for listening and supporting the Market Color podcast. And for your information, the Market Color podcast is now available on all the major hosting directories. That is Apple Podcast, Spotify, Google Podcast, as well as Amazon Music.